in 10 years, money will definitely be a complete commodity. And what is going to be a true differentiator is what that VC can bring to the table out of the money. Free exits in 10 days, all-in payments in 2013, awarded Angel of the Year in Europe. If you ask me, would I do that again? Never. It took a strike on my health in basically trying to accomplish that overambitious vision. When all this starts to grow, stablecoin payments and the agentic AI economy will be huge.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Au, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 40,000 members and get transcripts, resources, and community at www.bravesea.com. Stay well and stay brave.
Hey, Dušan, so excited to have you on the show.
Thanks, Jeremy.
Yeah, it's been fantastic meeting you at Super Returning Asia and then really talking a little bit about some of the exciting developments you have. There's so much to cover, but you have some exciting news to share. So we're definitely going to go into that. Dušan, could you please introduce yourself?
So I was, like many other who are investors today, originally an entrepreneur, an operator. I did 3 companies before I started to really invest. And the last one I did was very successful. And it was one of the first internet banks in the world. I guess it's more called neobanks nowadays. And it was way back during the dot-com era. We kicked it off end of the 90s, beginning of 2000 in France, where my wife is from. I'm originally Swedish, living in Singapore for 12 years. And we started that and basically just before really Wi-Fi came. And when Wi-Fi came, that really changed everything for our internet bank. And the reason why I'm talking about it's all about infrastructure. We talk about AI infrastructure today. In those days, we talked about broadband. Without broadband, we wouldn't have been able to scale up the internet bank as we did. Really, before that, we were more like a telephone bank. We would have a modem and people would dial in and the user experience was horrible, like tack, 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 tack. We can't help you on internet. We can help you on the phone. Really, really bad user experience. But when the infrastructure is there, which really came like 2002-03 in terms of Wi-Fi and broadband, then we managed to scale. And about 350,000 customers, 12 million euros of profit. The bank's name was, and still is, Mona Bank with a Q. And it is the leading still today in France. We sold it in 2005 to a traditional bank, Credit Mutuel CIC. And I was about 36 and was thinking like, what do I do next? I had some money, enough money to invest, but not enough money not to do anything in the rest, just sit on the beach. And what I did was that I looked at what worked the best at the internet bank, which was payments. And then I basically decided only to invest in payments. So I did a lot of outreach in Sweden and in France. And that actually worked out really well. And I was very lucky to have 3 exits in 10 days, all in payments in 2013. I was awarded Angel of the Year in Europe. And in connection with that, I actually also moved to Singapore and was thinking about what do I really want to do next? Like the companies based on Dibs, 4G Secure, ProWeb that I did as an angel investor, nobody would know in Asia, nor in the US. So I was sitting on this train, which was called a train de grande vitesse, because between Paris and where my internet bank was, which is 350 kilometers north of Paris, I had a lot of time to reflect because I was taking that speed train every day there and back to my bank. And I was thinking this train, le train de grande vitesse, TGV, I want to support companies that are fast. But then I was planning with TGV, True Global Ventures. So I want basically to support companies that were really fast and they were global. And that's really where I decided to really pin down and invest both in Asia and in North America. And I picked really Singapore as the hub because I felt that the regulators, including the government, was very strong at the time, both in understanding AI technology and blockchain technology. And that was very rare compared to any other jurisdiction that I found. So that's really a little bit of the background. And today, we've set up TGV4, 5, and 6. And TGV4, I'm very proud to done the journey from being the Angel of the Year way back in 2013 to now our vintage 2021 of TGV4 is actually the best performing fund in the Vinci 21 compared to at least PitchBook data and Carta data. I should make a caveat that everybody doesn't report the data there, but according to that data, we are the best performing fund of the 2021 vintage. So we're super proud of that.
Fantastic. So much to learn from your career as well as investing. As you think about this, it was a big move to go from building to investing. And I'm just curious what that transition felt like for you, like more about the motivation and that experience.
Yeah, so I think starting to invest is hard because you want to get really involved more than you should, because you are an investor and the entrepreneur should really run everything from A to Z. So that was a frustration. But on the other hand, if you have a portfolio like I had already as an angel investor of about 10, 15 companies that you invest into, there is no way that you can be super active in all at the same time, given that there are so many. So even if you really try to be helpful, you're still not going to be a pain for the entrepreneur because you have so many to really help out with. So it didn't really end up a problem, but it was the frustration in the beginning because you see this could work and that could work. I think where it really worked out for me in the early days as an angel investor was that the entrepreneurs I backed, they really, really believed in me backing them, not only with money, but also with help and relationships. I would especially mention the employment benefit solution program that we had in France, where the founder, when he saw that I could help him to sign 2 customers, said, Dušan, if you want any other investors to join our round, just go for it, just explain what we do. And if you want me at the end call, do it. But I know that you really know how to talk about the company. So what I'm trying to say is gaining the trust of the entrepreneur at the early stage, no matter if you're an angel or a VC later on, is extremely important. And if that trust is not there, which is on both sides, then it's very hard to be the winning team. And that was a little bit the frustrations I had, but also that it worked out that some of the entrepreneurs said, go ahead, I really like what you do, and let's keep doing this together.
That's interesting learning, right? Which is that as a founder turned investor, you want to get really in, but then you have to be hands off. After a lot of experience, what is the appropriate level or relationship you think that makes sense for a founder turned investor who's valuable because of that founder skill set, but still needs to invest and be thoughtful? What's that appropriate level of posture?
I wrote something when I got this award, Angel of the Year in Europe, way back, which I called, we need to shift the 75-25 to 25-75. Let me explain that. So what normally a lot of early stage investors do is that they spend a lot of time on due diligence. And that's fine. I spend a lot of time on due diligence even today. But if you really want to be successful as an investor and that the entrepreneur takes the most out of you as an investor, it's really defining very clearly where the value add is. It's not so much as just how many hours you spend on it, but what you spend on it, right? If you're just there bogging him down on actuals versus budget forever, then you're not really helping. You have your monthly report, you have your quarterly reviews, that's fine. But beyond that, it's just too much. You need to define as an investor exactly where you want to help the entrepreneur. What I defined were basically at the very early stage already as an angel that there are 4 areas where an entrepreneur really needs help. 1 is with customers, and then I'm talking B2B. I only do B2B from the start. 2 is key recruitments, and then I really mean key recruitments. And then number 3 is help with funding the existing round that I might be joining and finding other investors and or the next round. And last but not least, on the M&A side, like who is willing to potentially buy the company. If you define those 4 areas really well and get the entrepreneur to understand that, and what I do nowadays, which I didn't do in the beginning, I explain all this orally. Now I even do a reverse pitch and explain these are the 4 areas, this is where we can add help on. And even if it's not legally binding, it's an agreement on these are the 4 areas and nothing else that we should be helping with. And if that is well defined, then you're not too much on the company, you're enough because it's predefined and well structured from the very beginning. But that has come with experience, as you said, in the very beginning when I did this as an angel investor, I explained it more orally and on the fly, whereas now it's way more structured.
What's interesting is that you've also seen companies that succeed versus those that fail, versus those that are somewhere in between. And Angel Investor, and I see this. What do you do, or how do you approach the founders that are struggling, right? Because I think for me, successful founders hit the atmosphere, they hit space, and they're off to the races, and everybody's helping them. But I think there's almost a moment where founders struggle. Every founder will struggle. And then some will fail and some of them will course correct and some will continue struggling for a while. I'm just curious how you approach that set of conversations with the founder.
One thing could be that you're just struggling with the vertical that you're in, or that the verticals that you have tried do not work, like for whatever reason. So in that case, it's just really to make sure that you restart with different sets of customers, with a slightly different USP as well. And that you can probably do with your existing funding. So it's actually to be very agile and be able to test different things as much as possible with the existing money that you have. And then you can help as an angel or a VC by providing tons of different introductions to the company until it's found the product market fit. So I think that's a pretty normal struggle, that one, and it's not that serious. I think most companies are going through that. Very few find an immediate product market fit. Although with all the AI new technologies, you probably can find the product market fit faster and you find out where you fit better than previously. But still, you still need help there and to be agile. The second piece is if that doesn't work and you're really running out of all options and you can't refund the company, and even after existing investors bailing the entrepreneur out one or twice, potentially times, and saying, let's do an extended round or let's do a convertible for the next round, if that still doesn't work, what we have done is that we have tried to find a home for the company. And we've done that 8 times successfully. So it's basically our own internal M&A function. Obviously, we do it together with the entrepreneur, and that worked extremely well. And if you do it fast enough and quick enough, it can still be a very good outcome, both for the entrepreneur and us as investors. If you are aligned on it, then you do it fast. So that has definitely worked. Now, I do need to say that twice has actually happened that the entrepreneurs have completely given up. So they've said, we tried everything, it doesn't work, we want to start a new company. And in that case, we've been sitting there with quite a lot of good technology and an asset, which we still have found a home for. So in 2 extreme cases, we've actually managed to find somebody to pick up the asset because it's not the team, even after the founder has basically said, I'm giving up on this. And I think that's a little bit our speciality in terms of turning around the companies, because we do put a lot of our own entrepreneurial money into this in terms of GP commit. And also that we also have this entrepreneurial vibe that we never give up on a company. So in 2 cases, which is extreme, and I think we'll publish a book about those cases at some stage, we've actually sold 1 company twice without a team.
Wow, I think that's super rare. And I got to say that's a capability and also willingness to do something that's pretty rare, I would say, across, I would say, both angel investors as well as VC funds, actually. So I think kudos to you for that. And obviously, I think we'll have to do a future session where we'll do an in-person masterclass a little bit on venture capital fund strategy, capabilities, and approaches. I know you're also doing some fascinating stuff around fund tokenization as well. So we're not going to do that today, but I know that one thing that we want to talk a lot about was actually about stablecoin licensing as well as AI agents.
So it's basically one of our portfolio companies called Animoca Brands that has actually received its stablecoin license in Hong Kong, the stablecoin license which is linked to the Hong Kong dollar. And that process really started way back, and we were expecting to have a result already in August last year. 36 applicants in total, and only 2 out of the 36 applicants have been granted. And one of them is Anchor Point, where our portfolio company, Animoca Brands, is heavily involved together with Standard Chartered.
So what's so special about stable coins and a license and AI agents? Because stable coins are already existing. It's a form of currency tethered or pegged to fiat currency. So that's been around for a while. That's one. Licenses have already been around for a while. So what's so special about this current development?
I'm not so sure that there have been so many licensed stablecoins actually. So I think that's still very rare, and especially in Asia. So that is a little bit of a first mover, that it's a regulated licensed stablecoin in Asia, which makes it unique. And the second piece, I think, where this is very interesting is that the focus is really on regional trade. So think trade finance and having stablecoins replacing or being a complementary solution to the big trade flows, not only in the Asian region, but also globally. That's really where we see that this could become very interesting. And it has obviously a special quotation because Hong Kong, even today, is still like it used to be ages ago, a little bit of an experimental area for mainland China where they try things which they may not try in mainland China itself. And I think that is also true for this stablecoin, that there is some regulatory embracement of trying things that are new and innovative. So I would say yes, for Asia, it's very unique that it's licensed, and this kind of trade finance touch on the stablecoin is very interesting. And last but not least, the touch that it at some stage, and I don't know when that is going to happen, the agentic AI could also position itself in terms of using this stablecoin, and that the anchor point will be looking at some point of how to use the agentic AI for preparing payments from both sides. We've seen that happening already in only one case, big until now, which is Circle, which is running the USDC stablecoin in the US, which have successfully launched also their agentic AI tools around the stablecoin. So there are three areas why this is really interesting.
I think we probably have to break this out into chunks. So to me, obviously, stablecoins are exciting. It's a way to do transactions and do payments in a way that's faster, has less tolls, right? So you capture more of the value when you do the transactions, and you can move a lot faster, right? So I think stablecoins are interesting in that way. Licenses are also interesting, right? Because that means it's government approved. There's no crackdown by the government against it to seize it or to prevent it from flowing. And of course, what's interesting about Hong Kong is that it's pegged to the US dollar, but it's also a gateway to China. It's a great jurisdiction. I think Singapore also has some stablecoin regulation as well in play. But I think what's interesting about this is that you're also doing this with an AI agents angle as well. So could you share a little bit more about what the vision would be with this license?
We looked into way back in 2018 and 19 and said that at some stage, the intersection between blockchain and AI will happen. We were obviously way too early. But one area where we believed that would happen already in those days was within payments. So let me give you a little bit of that analogy, why payments is so important, generally speaking, for the agentic AI economy, and then maybe in particular for the stablecoin. So payments is always been the first mover when it comes to financial services innovation. And we call it Fintech today, but in the early days, it was only payments. There were no other Fintechs more than 10 years ago. And what happened when we had the first so-called e-wallets, if you remember that, like PayPal, Alipay, and others, was that basically you would experiment a little bit. You didn't really trust that all these online payments can happen because security, logistics, and a lot of other things were not really there. So you would basically open up your own wallet, put in maybe $100 into it, and then hope that everything would work out. You wouldn't open up your account with salary on an e-wallet in those days. So that's really how it started in terms of innovation. Obviously, security came in and everything became much more secure. And today, payments is fully secure from a fraud perspective. Not fully, but much better than it was in those days. If you look at payments today, an agentic AI economy, what are you looking at? You're potentially looking having an agent doing things for you and then paying at some stage also for it. But you may not want your agent to have access to your credit card yet, right? Maybe a second credit card where it's only a little bit of money, if I take the e-wallet analogy from PayPal in those days, 10 years ago. But you don't want to give the main credit card to your agentic AI tool that is going to help you with payments going forward. So you want it to prepare the payment, you want to look for what you want, prepare everything that can be done, but you still want to have the human in the loop to authorize that payment. So that's really where we can see that the use case of payments in general and agentic AI could work, and would be probably the first one that is already working, like I mentioned, with a USDC stablecoin use case. So payments is definitely at the forefront of the agentic AI economy. And it's probably one of the biggest and best understood use cases, even if it's still early days today. Now, if you put that into a stablecoin concept, you just see that this can be multiplied by 10, if not 100, because the flows that a stablecoin can cover, and especially when it comes to anchor point stablecoin, is on the trade flows. There you have also a lot of documentation that is very interesting, everything that is trade finance linked. There's a lot of documents that need to be accepted and pre-approved before a payment can occur. And all of that can be helped by agents to prepare all the documents that are needed. You still need a human in the loop to double check everything before the payment goes through. That's for sure true, right? But a lot of things can happen before. And that's really where the agentic economy, I believe, is going to be and is already starting within the payment flows. Now, I do want to mention one other thing. You still need that human in the loop, and just moving a little bit from Animoca and its stablecoin license to that human in the loop, we have another portfolio company called Ledger, which is actually a hardware device, which is outside of your software certificates and anything that you have basically on your computer, and is something that you really have, which actually can help to be that human in the loop. So you have your hardware device where you authorize the payment, and that is still you as a person doing it. And the AI agent can do everything else on both the receiver and the sender side. Now, the analogy with that would be, how did internet banks start 10 years ago, including many of the banks in Singapore and in Hong Kong, is that you had a token, you had a hardware token on the side that was something that you had, and then you something that you knew, which was your account number and so on. So you had a so-called two-factor authentication. That's how internet banking payments become big. Now, that same analogy is also true for the new world of looking at the agentic AI economy and stablecoins. You still need to have that two-factor authentication, which is something that you have on the side of the computer, which cannot be hacked by the latest version of Mythos tools from Anthropic or any other tools that might come in. And we can find a lot of vulnerabilities. So the same which was true 10 years ago when the hardware tokens came for internet banking is still true today, that you still need to have that trusted security solution for payments between an agent and an agent. So when all this starts to grow into a complete infrastructure like we had for payments 10 years ago, then I do believe that stablecoin payments and the AI economy and the combination of the two will be huge. And I think that is happening right now. It's as exciting as it was with payments way back in 2002, 3, and 4.
So one interesting thing is that the agents obviously are starting to transact with one another and transact with humans as well. Do you think there's a world where the agent economy transacting with one another is larger than humans transacting with one another? How should we think about the size of this AI to agent to human transaction economy?
Yeah, so that's a question actually we asked to our audience. We had a huge event in the Bay Area last Thursday, and we asked basically the question, when do you believe that 10% of the transactions would be in the agentic AI economy? And we said 1 year, 3 years, 5 years. And it actually was pretty spread out between 1, 3, and 5 years. So the middle ground was 3 years. So that would be that 10% of all payments are agentic AI payments in 3 years. I personally believe that it's going to be faster. I just believe that the whole service industry, the way it's done, is going to be faster than that. I would say that we can have 20% of all payments being agentic AI payments in 3 years. That would be my own bet on it. It's going to be embedded in such a way that you don't think about it. When we started with payments 10 years ago, the first payments you did online was very complicated. And those hurdles and how it's going to be embedded and how you use it, maybe partly with voice and other simple, very user-friendly solutions will be there. And I think you won't notice all those agentic AI payments. And I still think, like I said, that there will be some authorization done by the humans, either by a hardware device or maybe with voice for small transactions. But the bigger the transaction, the larger the transactions is going to be, and especially in B2B, then the security of the transactions is going to be extremely important.
When I think about this, agents transacting agents is to me a function of tooling, right? Which is that we are
Yes.
giving them instructions to make money. Therefore, they'll transact and buy and sell. Server processing power to do this and do that. So instead of a giant finance team working with product managers, etc. To me, it feels like there's a connection with productivity or the concept of corporations, right? Historically, if I said, hey, a corporation needed to double the revenue, you would double the transactions as well, and you would double the workforce, I think, on average to achieve that revenue, right? And I'm just curious how you see as this transaction economy takes shape and empowers the shifting of value. Do you have any thoughts on the size of corporations or labor productivity or how you define that?
Generally speaking, where we see the biggest productivity of AI right now is definitely in coding, definitely by far. So there it is already happening. Most developers are using AI tools. And yes, in some cases, it's not about future works and saying that, those who are using AI tools will replace those who are not using AI tools. That's what the future looks like. And that everybody should use AI tools. In coding, you're also seeing that less recruitment is needed, period. And the biggest example of that, which I think made everybody in the venture community wake up, was Peter Steinberger's example of OpenClaw, where basically the open source contributors and developers using OpenClaw, he got as many contributions in basically a couple of months as Linux got in 20 years. So that just shows you how strong the open source community basically backed OpenClaw originally. And OpenClaw is not perfect, and there is a new claw and many other claws now that are happening. But it gives you the example that a one-man person, and rumors say that his company got acquired for 1 billion, from what I understand, in stock by OpenAI, but didn't need any funding, didn't need actually even to raise capital to recruit people. And I think that deal made us all think twice, how much is capital actually really going to be needed in the VC industry going forward? And when I saw that, I realized that we claim to be one of the most networked VCs in the world, which is between San Francisco, New York, Paris, Stockholm, London, Dubai, Singapore, Hong Kong. We run 73 events in the last 10 years. We have 16,000 relationships. We're very proud of that. But when you see that somebody can basically scale a company from zero to an enormous success, at least from number of open source developers contributing in a couple of months, you ask yourself, if they don't need our capital, what do they need? We decided at True Ventures to actually start to build our own autonomous agents. And why? To help our portfolio company. And I think what you will see going forward is some kind of a bartering kind investment. So yeah, you may put in some money, but you put in your whole network into place to help those portfolio companies that can run very agile. So that's really how I look at it in terms of productivity in general, specifically, I would say in coding, and especially in the open source part, which I think is the early movers from that whole area. And then we'll see how that translates, Jeremy, to other areas. But we can definitely see it in this area that the VC model has to change.
Now, this is interesting, right? Because when I think about VCs, I think of humans debating about whether the investment case should be made and talking to humans and making a human decision. And then we have two general partners because one person might be biased, and then they argue, and then some people require consensus agreement. And then that would be in a two-person VC fund. And obviously, you scale this out to a 100-person or 200-person VC fund. The kind of scales as a problem, right? So what do you think is the future for VC funds and how it operates, where value is being moved by agents? Agents are talking to other agents. How do you see that play out?
In terms of decision making, I do think that when it comes to a little bit of later stage, it's definitely going to be based way more on as much hard facts as possible. I think already today, you have a lot of AI tooling helping you in the due diligence to spot things that may not be correct and accurate, which helps you a lot in the due diligence process itself. But that's a little bit after you have decided to go into a deal. But to even go into a deal, yes, I do think data gathering in terms of decision making is already profoundly changing in terms of what are the facts, like what you go into. I still don't think that the human in the loop there is going to disappear, Jeremy, because basically you're saying, are they going to be obsolete, those humans, to make the decisions? I think what you will see is a big shift in terms of the data gathering, where humans were gathering the data and they came with their conviction. Here you will see a lot of AI agents also doing the data gathering, which means that you have even more data and hopefully can make faster and better decisions. But I don't think that the human will, in the loop, like looking at this overall data, is going to disappear, especially not when it comes to early stage investments where you really take a bet on the entrepreneur more in terms of his personality and his track record and wants to achieve, as opposed to what he already has achieved. So in the early stage, I think it's going to be much later. In the later stage, and especially if companies are profitable, there I think we will have a major shift already by end of this year, if it's not already happening.
So let's play that story out in 10 years, right? Because right now, as it plays out, people compete. In 10 years' time, if you were to make a bet or point of view on what venture capital looks like, maybe from a founder perspective, how do you see that play out in 10 years' time?
I do see, like in 10 years' time, that the founders that are picking, given that the funding need by then is definitely going to be different. The normal thing that you look for funding is that you recruit more developers, you recruit more marketing sales. If AI agents can do that already for you, that the funding you are needed is going to be diminished, maybe not go to zero, but it's going to be diminished, that your funding needs. So that's number one. And that means that you want to pick a VC. Yes, they need to put in some capital, if any capital at all in 10 years, honestly, to basically support your company. But I do believe that in 10 years, money will definitely be a complete commodity. And what is going to be a true differentiator is what that VC, as I mentioned before, can bring to the table out of the money in terms of support and having their own agentic AI support, which can be tapped into the portfolio companies' fleet of agentic AI that they already have. And those synergies will make the next unicorns. I actually think that's going to happen even earlier than 10 years, to be quite honest with you.
I'm curious because you could almost make the argument the other way around, which is that would all these value add be commoditized because everything's rentable? And would VC funds be focused purely on the largest check as early as possible? Because AI agents are doing the sourcing, the scraping, the due diligence, and even maybe the final decision making. So maybe it's going to be about moving capital as early as possible to the best coherent bets from an AI perspective, and then everything else is for rent.
Yeah, that I don't believe in that much. So
Mm.
basically, I do know that some VCs are looking at the pattern of certain entrepreneurs, even when they are at the current jobs, if they, based on AI predictability, can become the next unicorn founder, and they put a bet on them even before they have actually jumped and basically said, I want to create my startup, just to come in as early as possible. I still believe that that good companies are created in crises when you can feel the need of a customer problem that needs to be solved, and jumping the gun there and making a bet on somebody who maybe has the right profile in terms of what he has been able to do, and offering him funding to create his startup before he or she has really thought through that creative, critical crisis process, that I don't believe in. That's not how the brain works. So I think neuroscience and understanding really how the brain works is going to be critical to really understand those processes. And now you could always argue, can an AI agent start his own company because he has so much knowledge already at some stage that the next company may not even be founded by a human? I still believe that those things will be more process improvements. So like better things, like improvements, as opposed to complete disruptions. Because for the disruptions, you almost have to get out of existing data to really do something big. So yes, I do believe that capital will flow earlier, Jeremy, but flowing it too early without thinking through that critical step of crisis thinking, creative thinking when you do a startup, and understanding how the brain works, I don't think that is going to help that early. So too early, too much capital, we will probably see pretty much of a disaster like we saw in the internet and the new economy where the internet started, and everybody basically invested as soon as somebody had a website with a couple of clicks. I think there were some mistakes happening there, and I think those mistakes will be repeating themselves.
Thank you so much. And my last question for you is, could you share a personal story about a time that you've been brave?
Yeah, so I think for us and for me personally, one thing that was very tough, I was Angel of the Year in Europe with these 3 exits in 10 days. I had pretty good track record as solo GP and wanted to create a traditional GP LP structure. And I thought that would be much, much easier and faster given my track record and what I'd done before. But it still took me almost 2.5 years to set up the first fully functional GP LP structure. And that took way longer, and it was very challenging. Obviously, my ambitions levels were enormous. I wanted to be basically in 20 cities around the globe, in North America, in Asia, and Europe. And I wanted to have basically around 4 partners in each cities, which meant 80 partners across 20 cities. And I was believing that all those partners would almost work like we describe agents today in the agentic AI economy, that they would do certain tasks. And the source of truth binding all those 80 partners would be the blockchain. Obviously, I was too early with it. And even if I pivoted with it, which I did, it still took 2.5 years to really onboard it. So what I learned from that was basically having a vision and ambition is extremely important. We all know that. But to start to execute it on a step-by-step basis is also extremely important, to get that balance between a huge vision and step-by-step execution. And everything worked out well in the end, right? This is the fund that is the best performing fund in the world now in 2021, which shows that when you go through extremely challenging times, you can still benefit from it. But if you ask me, would I do that again? Never. It almost took a strike on my health in basically trying to accomplish that, I would say, overambitious vision.
Thank you so much, Dušan, for sharing. So I'd like to summarize the 3 big takeaways from the notes I've taken. First of all, thanks so much for sharing about your experience being a founder and transitioning to an investor. I thought it was just interesting to hear about some of your reflections around being an angel investor and recalibrating how you approach the right level of attention versus portfolio versus value add. And I thought what was fascinating was your reflection that one has to be thoughtful about the reverse pitch, about how you will structure and what you're actually promising, to make it much clearer to the founder what's actually accessible. Number 2, thanks so much for sharing about the exciting announcement about stablecoin and licensure by the Hong Kong government. I thought it's fascinating that Animoca is going to this and really seeing this as the future for AI agents and that economy. And lastly, thanks so much for sharing about the future of AI agents and what it means for one end, of course, labor productivity. But I think what was interesting was that you're making a bet that the agent economy in terms of transactions and volume will be much larger than the human economy, and that you think it's going to be much sooner rather than later on one end. And then on the other end, also talking about how VC funds have to change in that world. And I think there's so much more to think through. And thank you so much for sharing, Dušan.
Thanks for having me, Jeremy. My pleasure.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.